The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Good morning. Good morning. As your announcer there said, this is the Small Cap Roundup. What I like to do on this show and in the newsletter that we just launched, I'll be talking about that today. What I like to do here is talk about a lot of these smaller cap names, sometimes a bit on the thinly traded side, which means you need to be use a little extra caution. Talk about a lot of names that are not necessarily the familiar household names. You know, we hear a little bit about that, there's some phone maker, some tablet maker. Can't remember. Oh, Apple, that's it. That's the name, yeah. You hear a little bit about that stock every now and then. You hear about Google, of course. You hear about the Dow components. I'm looking on my television right now. They're talking about Walmart and some of the problems over there, Dow component, of course. So what I'm talking about in this show and in the newsletter are some of these smaller names that can show some very strong price moves in a market that's trending higher, as we have right now. It has been confirmed by price and volume action on the indexes, not by my opinion or anybody else's opinion. It has been confirmed by the price and volume indicators that many growth traders and investors do look for. In a market like this, some of these smaller cap names can be some of the best leaders. Tom O'Brien and I talk about this a lot when I go on his show in the afternoon. A lot of times I have a short segment that I'll go on his show, and we'll talk about this. The very fact that some of these smaller names are the ones that, in a market that's trending higher, they'll be some of the biggest leaders out of the gate. We're seeing some good action in some of these newsletter stocks, some of the model portfolio stocks right now. And I want to talk a little bit, one of the things that I'm going to be doing on this show more frequently, I think, now that we have the newsletter out there, and I'll certainly do it in the newsletter too, are just a little bit of discussion of some of the technical and fundamental indicators that I look for. I've said it many times previously on here, but if you're new to the show, I don't use fundamentals to determine whether or not I am going to buy and sell a stock. And when I look at fundamentals, I think a lot of traders, a lot of investors, particularly fund managers, I talked to a lot of fund managers, talked to a couple great guys this morning that I want to invite on as guests. They're managers of an international small cap fund based out of Chicago. So happens I went to business school with them, but they're terrific. We'll try to bring them on in the next few weeks. Guys like a lot of these institutional investors, they are looking at PE ratios as one of their main determinants for whether or not a stock is undervalued. If you're in a fund, you definitely want your fund managers doing that kind of research. Lot of very, very smart people who are running these funds. However, I've said it many times, the fundamentals for an individual investor are not necessarily what you need to be looking for. And I'll take out the word necessarily. They're not what you need to be looking for to be determining your buy and sell points in an individual stock. Just because you can so frequently see a company with fantastic fundamentals, but it's on the decline. Okay, let's use Apple as a little bit of example. I know it's up today, but just talking about some of its action in recent weeks, where that stock has just had glowing fundamentals, and it has been on the decline because after that big run-up, of course, you are going to see some profit taking. So will the buy on the dip there offer a buy opportunity? Sure, it often does in a fundamentally strong stock. But a lot of people try to buy on the way down, and all that does is means you can see your position in that account, you can see it dwindling away, and then meanwhile, percentage-wise, it's got to make up more to get back to even. So I'm sure most of you have heard this, the old saying, and it's not a saying, it's just math, is that if a stock falls 50%, then you've got to regain 100% to get back to the previous point. So it makes it that much tougher. So in any case, that's why I really don't like these falling knife type of situations, trying to grab a stock on the decline. I like to wait till it shows some kind of support, at least at one of the key moving averages. And that was something I wanted to talk about a little bit today in the first few minutes. Just some of the very crucial fundamental, and not fundamental, rather technical indicators that I am using. The fundamentals, obvious, strong sales growth, strong earnings growth. Not worried about a PE that's too high. Because a lot of times, a lot of these growth names, they've already traded higher. That's okay. You're going to see a PE ratio that many of the fund managers are going to say, well, this thing is overvalued. There's plenty of situations historically where a so-called overvalued stock or expensive stock has gone on to rise higher. So that's not always going to be your determinant for further price growth. A lot of the traders I talk to, you've heard them on the show. We had a month or so back, we had Jim Rohrbach. I talked to Marianne Aiden. We've had a number of people on here talking about moving average support, watching moving averages as a key indicator of support. That's certainly one that I rely on extensively. So I wanted to talk a little bit today about how that works. It sounds almost too simple, and I know a lot of people like more indicators. I'm getting a note here. Apple comes to mind. Exactly. That's in the Tiger Den. That's a very good point. That dovetails with exactly with what I was saying. I'm just going to put a chart of Apple up there, and I was going to talk about Omnova, and I will talk about that. That's one of the model portfolio holdings from the newsletter. Right. So there you go. And in fact, I had been looking at this earlier this morning. The fact that it is at this juncture getting some support at that 50-day line. So, has it been a bit of a strange chart lately? Absolutely. But the support right there, and even the fact that it fell a bit below that 50-day line, held up very nicely above that longer term, 200-day line. It didn't even come close to it. Didn't even come close. So we are seeing some support along the 50-day line of Apple. That's a good example. For more aggressive traders, could this offer a buy opportunity into Apple? Sure, it could. And what I want to do here, I want to take a look. Probably going to talk quite a bit about the moving averages today, because in addition to some of the longer-term 50-day, 200-day lines, also some of these shorter-term trend lines like the 10-day, the 20-day, or you might also want to say your 15 or 30. That would be another one you could use. Those are some good indicators. Now, right now, Apple is just about at its... You've got your 10-day line on here that is below your 20-day line. So what you want to be looking for here, and I'm certainly going to be watching for this one on Apple, is a crossover of the shorter-term 10-day line to cross above the 20-day line. For me, that's going to be a buy indicator, but I'm very encouraged right now by that support at the 50-day. So recognizing, of course, this is the small cap show, and all the same rules apply when it comes to the moving averages. As I was kind of starting to say a moment ago, it almost sounds too simple. People like a lot more indicators. And in fact, I've heard people feel like the simple moving average, because it contains the word simple, that it's too unsophisticated. And this was something, as many of you know, I was at Investors Business Daily for 10 years. Among my colleagues were some of the people that you know well here from the TFNN family, Ken Shreve, Ken Hoover. I worked with both of them. And, one of the things that Bill O'Neill, who is the founder, the chairman of IBD, one of the things that he used to talk about quite a bit was how he would hear people trying to overlay more and more and more indicators just because, the feeling, I know we all have this, more is better. You think of a little's good, more is better. And frankly, what does end up happening most of the time is that you just end up having too many contrary indicators that kind of run in the face of each other. That's what I meant by that. I didn't mean contrarian. I meant just too many indicators that are kind of flying in the face of one another and can send you conflicting signals. There are a few occasions where you might be able to work something else in there, perhaps a MACD, because that does tend to segue pretty nicely with the focus on moving averages, and I do know a lot of very successful growth traders who use that. I do use that on occasion. But you really can. Ultimately, what can happen is you can just get way too much noise going on in there. As the old saying goes, you can't see the forest for the trees. So, really, bottom line, when it comes down to the buy and sell decisions that I am making here and the indicators that I'm using, it's about price, it's about institutional support, which shows up in the volume, which does show up, of course, in price increases, and which shows up on key moving average lines. And one of the reasons that the moving average lines are key is because you will have, as a stock dips, you will have the institutional investors, the fund managers. Some of them have come on this show and told us that they will do this. They will buy as a stock does dip lower. They want to add to an existing position. And that's something you can do. It also could be an opportunity for you to enter a new position in a stock if you missed the earlier breakout. So, I do use exponential and simple moving averages both. The simple moving average kind of gives you the overall average of, say, the 50-day, just the average of the price closes over the past 50-day. On an exponential line, if you're using, say, a 10-day, then you're going to have the more recent period of time more heavily weighted. Same would go for an exponential 20-day, 30-day, etc. So it's a terrific indicator to show you what has happened more recently, giving more weight to data from more recent sessions. In any case, using either type is an easy way for you to have an advantage over the people, and I know I'm speaking to the choir here. Nobody in the TFNN audience is afraid of charts. It's kind of funny. When I write for a lot of other places, talk to a lot of other audiences, and you do get people who are unfamiliar with charts. And one of the great, wonderful, fun things about the community that Tom O'Brien has brought together here is all of you are chart readers. All of you use charts to one extent or another, so it makes it a lot of fun to talk about these topics. Anyway, just wanted to mention here, moving averages, that's one of the key indicators that I do talk about. Give a call, 877-927-6648. I'm Kate Stalter. We'll be right back with more of the Small Cap Roundup in just a couple of minutes.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right. I'm Kate Stalter. This is the Small Cap Roundup. And before the break there, I was talking a little bit about moving averages, just because I'm doing a little bit of writing on that, and I was just thinking about that. And as I mentioned, one of the things I want to do here on the show and in the newsletter going forward is to give you some ideas about some of the parameters that I'm using fundamentally and technically to screen for stocks. So as I was kind of writing some of this up yesterday, just to kind of collect my thoughts, because I was thinking about not only putting this in the newsletter, maybe blogging about it a little bit. I have a blog over at katestalter.com. Not too much there at the moment. It's I've gotten a little bit sidetracked with this very cool, exciting project of launching the newsletter, but I think now that we're out there with this, I want to do a little bit of blogging as well, I want to just let you know right up front, the stock picks are not going to be on the blog. They are in the newsletter, so that's the only place you'll be able to find that. It's on the homepage of TFNN.com. You can check it out for free right now for, I believe, another week or so. But that there is a time period right now where it is available on a free trial basis for you to take a look. And in a few minutes here, I am going to show you some of the picks that we did make. There are 4 of them. They're all trading higher today. And, of course, along with the general market. And that's, as well, one of the key components of my investing system here that we will be talking about, that the market is really the key factor in whether or not the stocks you own are going to be trading higher or lower. You know, about 75, sometimes even more than that, % of the stocks do move along with the general market. you can always find those examples that do not. But the point is that just the statistics show the odds are in your favor if you follow the trend. I use the term trend following a lot on here, and that is one of the things that the market direction is absolutely going to determine. So I put up a chart right there for a company called H&E Equipment Services. HEES is the ticker on that one. And this is a construction and equipment leasing company. This is a business that's actually looks like it's pretty ripe for some consolidation. But I don't get into stocks because they might be acquisition targets. We all make our mistakes. We all kind of learn a lot of over the years. We have some trial and error, every one of us. And that was one of the things I did try a few years back was, when rumors came out there that a stock might be an acquisition target. And, what would end up happening is it would just go nowhere. And frequently the deal never did come to pass. I can't even really remember the names. I think Albertsons was one of them many, many years ago that I was hearing about that. Could have been. But this goes back several years, and I don't attempt that anymore. It's just not a good, it's one of those trading on the rumors rather than trading on the trends, what the data, what the moving averages, what the price and volume indicators are showing you. So H&E Equipment Services. So this is pretty interesting right now because it is holding nicely right at its 50-day line, getting good support. You had just a few days ago, let's see, this would have been last week sometime, you had the 10-day moving average cross above the 20-day moving average. Good indicator. I like that. I just like everything the moving averages are showing me right now. You can see here up on stockcharts.com that I have in front of you. Nice support trading right along that 10-week line. So this is something, this has not been part of the newsletter. I'm going to do a little more analysis on this one, and perhaps I will be adding it in the edition that comes out tomorrow. Now, this one reports earnings on May 3rd, so the day after tomorrow. And this is not something that, I don't want to jump into this one ahead of let me see here. I believe I'm not sure they're talking about this particular stock, but yeah, earnings Thursday before the open. Somebody just put up in the Tiger Den. He's saying, yes, this is the one he's talking about. Yeah, it's, so I'm not going to jump into this one ahead of the earnings. That's not something I'm ever going to do. But we'll come back. I've got a few more showing moving average support, and I want to update you on a few of these names that were added to the model portfolio from the Low Price Leaders newsletter. So I'm Kate Stalter. This is the Small Cap Roundup. Got a lot to talk about today. Just a lot going on being earnings season. And I will be right back with some more updates for you on all of these names right after these messages.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get them, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. This segment here of the Small Cap Roundup. I'm Kate Stalter. What we talk about on this show, as the name tells you, are smaller cap stocks, also lower price names. So I do have the newsletter is called Low Price Leaders. There you will see my watch list and buy and sell updates on stocks that are priced between $5 and $12, as well as small cap stocks with a market cap of under $2 billion. And of course, if I enter a position in a stock and the market cap is under $2 billion, doesn't mean it's necessarily going to be sold when the market cap crosses that price, of course. Crosses that market cap, rather, sorry. Just means that's the entry point would be under when it has a market cap of under $2 billion. That's the screen I'm running. Same goes for the 5 to 12. I've talked about the example many times of Anika Pharmaceuticals, ANIK, which has been a very nice winner. Let me see here. Let me just pull up a chart of that one. I want to talk about Mitcham Industries here for just a second, but I want to take a look at Anika and see, yeah, so that one did have a little pullback a week or so ago, but is now trading nicely up there again. This is one, just to illustrate the example I was just talking about, of stocks that I might take a position in when they're trading in that lower price range between $5 and $12. But as it gains in price, does that necessarily mean it's going to be sold? Absolutely not. That's not sort of how this portfolio is going to be managed. There could be ongoing price targets. Okay, so just a little example of how that works, what the newsletter features. You can check it out for free. There is a link on the homepage of tfnn.com. Definitely want you to take a look at that. No obligation at this point. Just fill out the form there, give the folks at TFNN your information, and they will give you some more information and a free edition of the newsletter. So definitely welcome on board. It's a lot of fun. As I said up front at the top of the show, a lot of names you may not hear about on a regular basis. Now, Mitcham Industries, let's see here. This one has a market cap. Let's see here. Let me see. Okay, we've got Mitcham Industries right now trading at about $24.48. So that's something right there that obviously it's not going to be one of those lower price kind of stocks that I was talking about, but it definitely does fall under the category of the smaller cap names. Now this is one, let's see here. I'm showing you this here. It's correcting nicely along that 50-day moving average, okay, and getting very nice support along there. Now there's a couple ways for more aggressive traders who want to get into this stock at this point. There is some support above that 10-day line, and you did have the 20-day crossing the 10-day back, let's see, sometime that would have been last week at some point, so you would have had that occur. And there is an opportunity here for more aggressive investors. Now, for those who kind of, this is fine. There's no really right or wrong answer here. It just depends on your risk tolerance. Another buy point you could be watching is above $26.44, which was back here, the high before it pulled back, got support right there around that 50-day line. So this is another one that, as I update the newsletter, this one could be included. This has a market cap a little bit shy of $300 million, very small company. You know, decent liquidity for a company with that market cap, moves about 275,000 shares a day. This has been around for a while. This has been on my screens actually off and on for several years. It as if you had a longer term chart, let me try and put a weekly on there. I don't know how much that's necessarily going to show you. Yeah, it kind of does. So you do see it kind of suffered a bit back in 2009 and rallied higher, and just really hasn't been any kind of really outstanding name, although it is working its way back into something that is showing up on my screens once again. So this is they lease equipment to the oil and gas industry, seismic equipment. That's a pretty big segment of the oil and gas industry. So this is a small company that does that. One that I might be also updating when I do take a look at the newest edition of the newsletter, which is due out tomorrow. So be looking out for that one. So let's see here. I want to show you another one of these. When I was just kind of looking at some of these small caps, running some screens for small caps with good moving average support, this is one of those household names, but not one that in terms of a stock you really don't think about very much. Lazy Boy. LZB is the ticker on this one. Market cap just a little bit shy of $778 million. And again, some decent liquidity here. Moves about 540,000 shares a day. So that's good. For some of these smaller names, you do get some of the ones that are very, very thinly traded. And I tend to not like those as much, though I do have some of these. I will trade these, but you got to be super careful on those. When I say these, I mean the ones that are more thinly traded with fewer shares changing hands on any given day. If you heard the interview we had a few weeks back with hedge fund manager Edward Hornstein, who's one of my favorite guests, I really enjoy having him on the show, love hearing his perspective. One of the things that he was talking about was if he is going to get into some of these smaller names, he does like the ones that show less volatility, and frequently that comes with a bit more liquidity. So, okay, so Lazy Boy, nice support there along that. Let's see here. It's actually trading pretty well. Let me go back to a daily chart on Tiger TV. That's going to give you a better indication of where it's holding up above that 50-day moving average. Not really seeing a buy point in this one at this juncture. I want to just kind of keep an eye on this one a little bit. Let's see. It really did just clear that previous high. Actually, it did. It looks like it cleared its previous high of 1544. So I'm going to take a look at this one. It actually, now that I'm noticing that it has rallied today, it could actually be in buy range at this moment. So this is another one that kind of thing that may be included in the next edition of the newsletter. And I'm not necessarily making any promises. Sometimes you do take a look at these things. But right now, I am seeing a flaw in the sales growth, maybe not as robust as I'd like to see, but the earnings growth has been pretty terrific on this one. So is an interesting name to take a look at. I do like that it is right at that previous high. So there could be a bit of potential in this one as it does trade higher today. Let's see here. I've got one more name I want to show you just along the lines of some of these stocks getting good moving average support. And then I want to go on and update you on a couple of the stocks in the model portfolio, show you how they are doing right now. And once again, those are the names that I updated you late last week. If you did sign up for a free trial of the newsletter, you did get some updates on these, and so far they're looking good. I have tight stops in there. You know, I'm not attached to any of these things, but I'll come back to some of those in just a minute. Let me show you this one. The ticker I put up there is DY, Dycom Industries. Now this is a small company, market cap $795 million, moves about 330,000 shares a day. Again, you got some nice support right in here. You see on the daily chart, if you're watching Tiger TV, your 50-day moving average, let's see here, your 50-day line is right about at 22.68. So right now, the stock is trading right about 23.88. So it's getting some good support above really all of those key moving averages. You've got your, this is interesting, you've got your 10-day line crossing over your 50-day line today. I like that. I like that a lot. So this could be another one of these names. Now this one reports May 24th, so there's a little time in here to get into a trade prior to that earnings report. I do not like to get into names ahead of earnings, especially these smaller names. They can get punished severely if there is anything in there that the market does not like in the report. Margins getting squeezed, it could just be some arcane thing that you don't hear in the top line news. You'll hear when the earnings get reported, you'll hear, well, they beat, they missed. And on these smaller companies, you won't even hear that. These do not get reported on. So often, there's maybe a company you've never really heard of. You might see it falling in heavy volume after a report, and you might think, well, hey, what went on here? They beat views. Maybe it's the outlook. A lot of times the outlook is where a stock will get punished. And sometimes, as I mentioned, it's just something deep into the report that really doesn't even make the headlines on Yahoo Finance. It could be something like, again, like I mentioned, the margins, growing competition, maybe something in the order backlog that the analysts who cover the stock don't like. So, and they alert their investment banking clients, their trading clients. So, there could be quite a few things in there. Best to just wait. And I know you will frequently miss a big upside move. It happens. It happens. But when you wait for something, when you wait for one of these stocks that vaulted higher in heavy volume after earnings, it'll pull back. It'll offer you a new chance to get in. Let me show you an example of that. And this is one I've had that I'm watching. And it did make a nice move up today on the earnings. This is SourceFire. F-I-R-E is the ticker on this particular name. So it did make a big move up today, pulling back a little bit now. And this is the kind of thing that you definitely just want to wait. Don't jump into these things too quickly. It'll give you a chance to get in. What'll happen is a lot of the traders and investors who got in at a lower price point down here will then take some profits on this big move, give you a chance to get back in. So I'm going to keep watching this one. I still like the company, a lot of good potential. To follow up on something I was saying earlier in the show, the fundamentals are just terrific on this one. You've got double-digit sales growth at a pace that's been increasing on a year-over-year basis. You've got triple-digit earnings growth, and again, the pace of earnings growth has been improving as well. So this is one to keep an eye on here, and I'm definitely watching for that next potential entry point. I just want to check my 10-day line on SourceFire. Yeah, I mean that line's going to rise higher. Right now it's well above it. Just want to continue keeping an eye on, but just to make the point of, if you risk management is a big part of my system, and really, I mean, that's protecting capital is one of the main things I look at. Is it a bit of a conservative approach? Absolutely. Absolutely. Risk management. I mean, the very phrase does suggest being conservative about your investment approach. But you know what? I would really rather not have to be scrambling to sell something quickly after it tumbles on an earnings report and have that loss in my portfolio when there will be another chance to buy even after a stock gaps up. Okay, let's see. I've got a few more minutes here in this particular segment. Oh, there's a lot of things I wanted to talk about today. An hour goes by so fast. Let me show you here. This is a stock. I just put up a chart for Lumber Liquidators, and that's one I updated you on late last week when I did take a position in this name. Now you see, this is a good example of one that vaulted higher and then did offer a little bit of a pullback that let me get into that. And let me see here. I'll just give you an updated quote on where this one is at today. Let's see here. We have got, get my prices up here. Okay, Lumber Liquidators currently trading at $29.39, up about 1.59% today. So yeah, so this is actually what I was just showing you with SourceFire. This gave an opportunity to buy on a pullback after it zoomed higher and to take advantage of that. So the perfect illustration of what I'm talking about. There will always be a chance for you to jump in even after a big move up like that. Let me see here. I've got just a few more seconds in this particular segment, so I don't want to get into any other stocks. Yeah, and there's Tom Petty. He's telling us that. Okay, I'll have a few more names to update you from the newsletter right after this break. I'm Kate Stalter. This is the Small Cap Roundup. We're talking about some of the stocks from the Low Price Leaders newsletter. Stick around, and I will update you on last week's updates.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, we're back. The final segment today of the Small Cap Roundup. Now, I've put up a chart for you talking about one of these companies you never hear about, EPHC, Epoch Holding Corporation. Now, this is a New York-based investment advisory, investment management firm. And, you know, this is a great example of where you want to keep your opinion out of this. Because this one, a lot of these investment advisory firms, some of these stocks in the financial services area, you know, some of them, they can occasionally, more than occasionally, sometimes they can be fairly dismal performers. I'm not talking about the big banks. I'm talking about more in the investment management or even information content regarding finance. You know, there is sort of a physician heal thyself aspect to it of, hey, if you're in this industry, why is your stock such a loser? However, there was nothing in this particular case to indicate to me that this was a losing stock. So I really did have to separate out my opinion, go with what the data were telling me here. Volume has not been ideal on this stock. That's been a bit of a little concern. However, there have been a number of lower volume rallies in the past year or so. That historical pattern that you see going back that typically occurs where ideally you want to see heavier volume as a stock's price rises higher. Hasn't always really worked out that way. You did have some heavy daily volume. I'm indicating it there on Tiger TV back when, is it Epoch or Epoch? I'm not even sure how you pronounce this, but when this company did make a big move up a few sessions ago. So this is one that I added to the model portfolio. Now, it fell yesterday, as, of course, the major indexes did show some selling and heavy volume. Not ideal to have seen that. Now, I'm not really talking about this particular stock. That wasn't ideal in this one either. But it wasn't ideal to have seen a big volume pullback as so soon after the market did go into a new rally. When I say the market, I mean the major indexes. So it's not great to see that. However, this did not trigger any of my sell signals. I was watching it yesterday because if it had, I would have sent out an update to subscribers, but it didn't. So we are seeing some upside action in this one again today. Let's see. I've got a little bit of time left here. Oh, I'm just going to comment on something I see here in the Tiger Den. Too much talk about sell in May. Oh, that's absolutely right. You know, there's that's one of those sayings that some years it works, some years it doesn't. But rather than going on some old adage, why not just watch what the indexes are telling you? How about that? For a lot of the pundits that like to talk about this stuff. Let me see here. I want to show you another one from the financial sector that I updated subscribers on. This is called Regions Financial. RF is the ticker. It's a small bank based in the southeast. Now this is funny because I think I mentioned maybe in the Tiger Den after I finished the show on Thursday, I flew out to Atlanta right after the show. I had a meeting out there, and it was funny because as I was driving up to the meeting site, there I saw Regions Financial. I mean, out here in New Mexico and where I lived for years in California, don't really see those, not familiar with them. But there it was. So Regions Financial, we are seeing a nice gain in that one today. And you are seeing that, let me see here. I think even when we did have a little pullback yesterday, that's another one that did not trigger any kind of sell signal. All right, check out the newsletter, Low Price Leaders, TFNN.com. Sign up, get a free trial, and I will be back with you here on Thursday with the Small Cap Roundup.